So let's look at three high potential stocks for the last 2 quarters of 2025. If you've got $100,000 and you want to turn it into $10 million, I don't know that you're going to be able to do that with certainty. This is not financial advice. Do your own research. However, if you are trying to do that, it helps to look at stocks that a lot of people aren't buying. So right now, the NASDAQ, the QQQ, is overextended from April when the Trump tariff reversal happened, and the IWM, the Russell, the small cap indexes are heavily shorted. So what that means is, well, we'll talk about it, but I'll give you the tickers right now. GCT, GigaCloud Technologies, HNGE, Hinge Health, and RZLV, the AI company. Those are the high potential stocks. And you can take that information, you can run with it. We'll look at price levels, we'll look at fundamental reasons to buy it, including recent earnings. These are relatively newish stocks, IPOs, that aren't so illiquid that you have to worry about them moving 20% in a day. They're not biotechs like, Hims, which on some news just dropped based on Novartis coming out with a press release that their marketing was not representative of what Hinge Health was all about. Hinge Health is different. GCT is a social selling logistics company, which is a rising tide right now. And RZLV, anything with AI, is still hot. The bubble will pop, but not yet. So let's jump into these stocks right now, starting with GCT. So this is what the ticker looks like. And if we look more recently, we can see they went up about 50% since earnings right here. You might say, why would you want to buy a stock up 50%? And that's actually a really good point. And I expect it to digest a little bit here. You can watch this moving average, if depending on what you use, 10-day moving average, just to get an idea of what this is going to look like. It's probably going to go sideways and then go up from there. But that $30 level, basically where we're at, is really important because we see we rejected it here, supported it here, wicked down, supported it here. So if you can hold that, that's a really important level. Now, again, what this company does, B2B e-commerce. So large parcel merchandise, and they have a proprietary logistics platform. They have software. That is in a growing industry, which is online retail, which exploded during 2020, of course, but it's not just online retail. It's also the fact that internet bandwidth is so free now that there's a lot more videos and sales videos and social selling. If we look at China as an example, with hundreds of billions of dollars transacted over live streams, and that's all coming to the US the next 5 years. So this is a pretty awesome platform to do the picks and shovels part of all those parcels being sent around the country. Their earnings per share beat estimates. This is $1.14 earnings per share, and the estimates were 60 cents lower. So revenue increased and the stock just soared as a result of that. Now, they are expanding partnerships to Asia and Europe, and their relative strength rating was upgraded, which is pretty obvious given how it breakout happened over the 200-day simple moving average, this green line, and then it just continued the roar. This pullback in this buy barely affected GCT at all. It sort of found support here. So those are the technicals. The fundamentals are the earnings, and then the sector, which we really want to focus on for, if we're going to hold this for more than a few months, is certainly hot and growing: logistics, retail, software. Not just software like CRM or Now, which have been lackluster, but logistics software for online retail. So if you believe in social selling, GCT is a stock for you. HNGE, this is kind of what I expect GCT to do, is digest a little bit after earnings. Hinge Health is doing digital healthcare. So again, you're not worried about buying a stock like Hims that can have some bad news and drop, incredible 40% in just a single day. This is digital healthcare, so it's not like some trial results going to come out that can impact the stock price. They do AI-powered physical therapy. Use it from your phone, your iPad, whatever. And they did raise another funding round, valuing them as a unicorn over $1 billion. They have large employer groups in the US and Europe that they're working with. So this isn't just a B2C company. And they're doing personalized therapy. So employers save money because they can sort of do preventative physical therapy, and employees want to work at those companies because they get this as a benefit, physical therapy over their phone remotely. So it's a pretty good deal for everybody. They do have new AI features with customized exercise plans and real-time feedback based on the information you give them. It can learn and spit back a plan for you, which is a little more efficient, scalable than in-person physical therapy. And of course, the big driver being less costly. So in Q2, they reported $140 million in sales, up 50% year over year, which significantly beat expectations. And we can see that earnings reaction for that reason. Free cash flow reached $30 million, well over projections. And they had a 30% increase in clients, up over several thousand clients. Of course, this is what it is. I mean, it's an IPO from March, but unlike Figma, the drawing tool IPO that went 300%, oversubscribed, and then dipped all the way below its opening price, this one is actually taking a little bit more time, and with some revenue numbers out, it's moving up. So they are guiding for $140 million in Q3 sales. That's what they're saying themselves. The Wall Street says $130 million, which is a little lower, and their revenue projections are $500 million. So they're projecting a 40% growth in revenue, which is massive. They are an IPO, so those high expectations are part of why they, are listed and getting bought up in the first place. But that's the company. HMGE, the level you want to be careful at is, if it fails 53, you definitely don't want to touch it. But if it can hold this little undercut, this where this closed and this day held, so 56s, that could be a pretty good place to buy it. There's some volume traded up here, this close as well when it gets over that. So those are all the technical price levels here, here, here. Those are the fundamentals, the earnings. It is an IPO, so they're going to be profitable at some point. They are unicorn valuation. They are a venture capital funded company. And then the sector, digital health, if you've heard of BetterHelp or the Calm app, this is a massive and growing field as we digitize healthcare, at least the parts that we feel comfortable doing so. So RZLV AI stock, they're doing customer engagement. So think like anytime you want to do chatbots or anything that is customer support related or re-engaging customers, this is kind of how you do it. Now, AI is new. Some of these, chatbots or automated AI services that you've used, whether it's an AI voice calling on your phone, maybe you've rendered that. They're not complete yet. They're not perfect, but it's an IPO. So what did we expect? It has sold off significantly, but since this earnings, it's sort of started to turn up. And once it reclaimed the 200-day moving average in about end of June right here, you can see it actually held that, surfed it, moved up, and then it's surfing this 20-day moving average. So that's a sign that an institution or fund is buying along that moving average and holding it up. So we can just sort of glob onto them like a kayak globs onto a cruise ship and with a little bit of risk management, if we don't hold our position below, 290s where all this volume was traded, if we zoom out even more, we can see how much volume is traded there. This level, 290, is the most volume. Then that offers pretty good risk reward to the upside. So do be aware of earnings next week and respect that risk level. But there's a lot of blue skies as it is an IPO, and it has been down significantly, beaten down. So once it turns up, once the stock gets over a 200-day moving average, if it's in a hot sector like AI, it really has a lot of potential to the upside, especially B2B AI. It's not a pie in the sky consumer AI company. All right, so those are the stocks. RZLV is the AI stock. Hinge Health is the digital healthcare stock. And GigaCloud is the social selling logistics company. I think these have big potential, not just based on the industry, but also based on the price movement, reclaiming those moving averages and looking so strong. Look how this GCT consolidated for so long before moving up. As always, do your own research. Maybe you're a more fundamental investor, long-term, 2-year, 5-year, 10-year investor. If you want to talk about your portfolio, schedule a call at selfadvisors.com with me, and I will try to sell you something at the end, but only if I think it will actually be useful to you for a good fit, because I have to deal with you as much as you have to deal with me. If you're new to this channel and you haven't subscribed yet, subscribing helps other people also find this channel. And you may be like, well, I don't want other people to find this channel. This is my gem. Well, when other people find it, then they can also contribute ideas. And these stocks are so liquid, there's so much volume traded that it doesn't actually hurt any of us when we all contribute ideas. That's why subscribing is helpful, to have more eyeballs and more motivation for me to keep putting in effort to make this as well. So do your own research as always. I'll see you in the next one and hope to connect with you one way or another. You guys are awesome.